Donval FX social media channel. Happy new week to all the subscribers. In case you are new to this channel, Donval FX, please feel free to subscribe and click the notification bell so that you know when we upload a new strategy. All right, so you can get us in different social media handles like YouTube, Donval FX, Facebook, Donval FX Tech TV, TikTok, Donval FX Tech TV. Please don't hesitate to subscribe immediately you match into this channel. All right, so now in this video, I want to make this strategy available online, P30 strategy. Yes, I have received so many requests from the students, both on DM, both in groups, even those that have participated in the training, that they need something to be looking onto for more practice. So that we have decided to release it online. So in this video, I want to show us what is P30 and how you can use it to spot what entries and all that. Is a pure price action strategy. All right, P30 is a pure price action strategies. The P represent the period separator. Okay, let us down into chart. Let me choose one of the index. Okay, let me choose Crash 500 as a case. All right, so if you don't have, remember we said is what P30 strategy, P30 strategy, P then 30 strategy. So this P30 strategy is a strategy we use on 30 minutes time frame. 30 minutes time frame strategy. Okay, we use it on 30 minutes time frame, and then the P there represents period separator. You see this vertical line, we call it period separator. This vertical line we are seeing here, let me keep showing you. These vertical lines, they are known as what? Period separator. How do you impute it if you don't have? Just tap on your screen, the cycle will come up. Once the cycle come up, go to setting. All right, so when you pinpoint on settings, then come up a bit and then mark this show period separator, mark it, tick it this way. So the moment you do that, then these vertical lines will come up on your chart. All right, and we call that period separator. You see it, period separator. So the P30 remain period separator 30 minutes. So invariably is period separator strategy. That's why you call it P30, and it's highly effective and efficient. So pay attention. Let us see how do you spot entry on this period separators. So what is period separator? What is the function of period separator first of all? So period separator, now we are on 30 minutes time frame, as I have said before. Now this is 30 minutes time frame. So between one period separator to another period separator represent 1 day price movement. All this movement here on the chart, starting from here to here, is the whole movement of Crash 500 from yesterday till then today. A new one formed, and this one happened now is for today. You see, this one that is moving now is today. So it will keep doing until it get on the next one, which will be for tomorrow. So by the end of today, this price will get here. It will get to this one, and then a new day will begin. Okay, it will start forming again till the next day. So between one period separator to another represent 1 day price movement. And then this set of price period separator, it helps us to measure the high and the low, the highest high or the lowest low price has attained for the day. Like between this one now and this one, what is the highest high price has attained is here, somewhere here. Then where is the lowest low price has attained is somewhere here. You see it. So we use it to measure the highest and the lowest point of the price per day. That is one major function of period separator. Just like if we scroll back again or front here, now you see the major height price has attained for the day, because we know that between here and here is 1 day. Then the major height is here, all right, which is here. Then the major low was here, all right. So you can see it bracketed the higher high, the major high, and the major low of the price. That's what we use period separator to spot. Then let me zoom it a bit. You see that in each of the period separator there are candles that forms exactly on that period separator. Like this one is bullish candle. So this bullish candle is the candle that produces the new day. Those candle that forms exactly on the period separator, like this one happened to be bullish, is the candle that produces the new day. And this candle is usually formed by 1 a.m. I repeat, that candle is usually formed by 1 a.m. Then, in respect to this strategy, we are interested on that candle, on this candle that produces the new day. We are interested on the closing part of this candle. So, because this one is a bullish candle, bullish candle, the bullish candle, which is a buy candle, normally open from bottom and closes at the top. So like this one now, the closing part was somewhere here because it opened from the bottom side and closes up. So we are interested on the candle that form on a period separator, the closing part of the candle, just like this one. This one is also a bullish candle. You see this candle that form exactly on period separator is also a bullish candle, and it closes at the top side. Okay, so we are interested on these candles. In the continuation of this training, the first principle is that we need those candles. We need the period separator, number one. Number two, we need those candles. This one is a bearish candle. We need those candles that forms on the period separator. All right, because that is the candle that produce new day. Like assuming that here was yesterday, okay, here, from here to here was yesterday. So this one, today now, assuming, begins from here, and it happens to be the red candle. So we are interested at the closing part of this candle that produce new day, just like this one that is bearish. This one open from top and closes down. All right, so we are interested in the closing part of these candles that forms on period separator under 30 minutes. So now, and again, we are interested on the previous day trend, just like this one yesterday, because between here and here was yesterday, then today begins from here and is still moving. Okay, so we are interested on the previous day trend. That are the principles you must consider. You see, yesterday was uptrend on crash 500. All right, though it's continuing the uptrend now as of today. So this strategy is a trend continuation and also trend reversal entry patterns. Okay, now remember I said we are interested on the candle that produce the new day. Just like now that produced today was what? Bullish candle. So let us analyze this market from the, assuming we want to enter today's trend using P30 strategy. Let us see, how do you do that? So first thing first, you need to click. Remember I said we are interested on these candles that produce the new day, which is the one that form exactly on the period separator. And not only interested on that candle, we are interested on the closing part of that candle, closing part. Now this one that produced yesterday was a bullish. So what are you doing? You will now tap on your screen, then go to your tools. Look at your tools here, get a horizontal line, and place it at the closing part of that candle. So this one now, it closes at the top side. I mean this bullish, what is it? This bullish candle. All right, it's open from bottom and closes where I place my line. You see it now? So that's where it closes. All right, so then how do we make our entry? So upon spotting out the closing part of the previous day candle, so what you now check is the previous day trend. Let me add fractals to this to help you understand some situations as we proceed. Okay, so now you see the previous day trend before this formation was down. This previous day trend was down until it forms this new day here. It formed a new day there, but before forming a new day, there was a reversal pattern which we call double bottom. Okay, so double bottom is a reversal chart pattern, is a bullish reversal chart pattern. So this trend would have continued down because the previous day trend, remember I said this strategy is trend entry or reversal pattern entry. Okay, so now because price was on a downtrend, we are anticipating that this trend should form a new day and then continue downtrend or create a new high and continue downtrend. All right, so now on getting here, I want you to pay attention here, because that is remember I have spotted out the closing part of the day trend. You see this price move like this. So upon moving up, it forms the new day, then it move a bit up, then comes down. As it was coming down, what we are looking at, when we will receive a candlestick that will close below this line, and we have one because this bearish candle closed below the previous day close line, which is this horizontal line, but the body of this candle, bearish candle that closes below, is touching this line, so is not valid. As long as the body of this candle is still touching the line, is not valid. We are looking at candle that will close like this bullish candle. You see this bullish candle close successfully below. It closes what? Successfully below, without the body being touching. As it being that this one closed below the line, and it was only the wick that is touching the line, we can go in for bearish, and this price will have continued bearish. All right, but because we have a low here, then upon moving up, the new candle form, it move back again, return to the line, because that is where we are looking at. You see, it returned to the line, and now upon the returning, the very first close, which is this one, the body is touching this line, so we are not going bearish. So we allow this one, this new candle that open, assuming that this one later successfully close successfully below this line, we are going to go bearish, and this price will continue bearish. But because it forms and then close back above the line, then it's an overview that this price is no longer continuing down at the spot, because already we are seeing a pattern here that has violated the entry. So now as this one closes up and the body is touching, it gives us an overview that this price is reversing back instead of continuing the former trend, which is the previous trend, which was down. Then as it has closed up, we allow it another candle open and close successfully up. This one, you see this one open and close successfully up, and within that point, because you are aware of patterns, that is why you say if you must succeed in trading industry, you must understand candlestick, number one. You must understand candlestick pattern, number two. You must understand chart pattern, number three. Then you must understand trend. These are the four cardinal most important part of trading. So if you grab this, you have grab price action. Every other thing is a coefficient. Okay, so now because that this thing close up and the another candle that follows it close successfully above, you see this one is successfully above this line, it's away from this line, and already we are seeing a pattern. So from this candle now, somebody can join your entry to the upside, and you can see that price move to the upside, return, move again. Let us see what happened. So now your entry, what gives us overview for entry? Number one is the pattern that formed, this double bottom that forms. Number two, there was a turtle soup here, because let me use the other one. There was a turtle soup because price, as it forms the new day, it first of all move up, then come back and turtle soup this line, which some people call liquidity sweep. It is sweep below the line and then later close above. So that's turtle soup. This little, the presence of turtle soup here gives us an overview that this price and the pattern that has shown that the market will continue up at least to this level, at least to that level. All right, and that is one reason we join, because price later close above the line with a reversal pattern. Okay, we continue, and if you make your entry, then you are permitted to take only 50 move upon the move of the market. So what is your entry upon this this discussion now? So you're supposed to enter from this second candle, this one. Okay, because you are now this one first to close. This one you are now it to close, because that is the candle that gave us a report that the price has closed successfully above our 9. Okay, if you join here now, you are permitted to take what, 50 pips from the entry point, 50 pips from the entry point. And if you measure 50, this one that moves has only 22 pips, then it drops. So let us scroll and see. You see, you later have your 50 pips, even as it has even as it makes that retracement. Okay, because it has turtle soup at all, So we are very, very sure it's going to pay. You see, this is 55. So this is 50 pips. You are permitted to exit here. So at every point in time, your entry point made available, I encourage you take 50 pips and leave the market. Then some, but in 95% occasions, market used to present more than 100 pips. Like if you follow this one up now, you'll find out that maybe it produced more than that. Okay, now look at what happened. A new day. Upon the movement, you see it move, and form a new day here. This new day is a bullish candle. All right, we pick another line and drop at the closing. This one is a bullish, it closes at the top as well. So you see, from the previous day, the trend was bullish. Okay. So upon getting there, though there was element of a little drop to the downside as even, okay, then as it's coming up to create a new high, a new day was formed. Then we put our level line there. So what are we checking on this new day now? Since the previous day trend was up, but upon forming a new day, we received some sign of down, but not clear because there was no pattern that supports that down there. So now price calmed down. Look at what happened. Price came down. Upon coming up, there was a formation of a new day. Okay, then as it forms a new day, it also come down and make a turtle soup. It make a turtle soup there, because as the new day form, I want you to understand here something here. What is this thing? So the new day form here, first of all, as it forms, it first of all move up. After moving up, it came down below the line. All right, remember the previous day was still up, so it came down below the line and turtle soup the line. Then after turtle souping the line, it went further to close. What is this in? It went further to move up, then close above, but the body of that one is touching our line, so we ignore it. Then to form this bearish candle here that successfully closed above the line without the body being touching. Even if the wick is touching, no problem, but the body is not touching that very line, line of closing, previous day close. I mean this candle here. So because of this, we are making our entry on this very first second red candle, and you can see price went up. All right, as it went up, it manipulated back again below the line to turtle soup for the second time, and then later continues. All right, and it's going to also pay us $50. That is as of today. I traded this, though when I got to know this was when this second coming came up. Okay, so you see it produced. Okay, let us go back and also test run. Okay, so now you see here, look at this one. Okay, let me even go back more. By the time we show it up front, you see this one now. You see the previous day trend was down. Down. Upon getting it, it forms a new day here. Okay, so now we peep this new day here was a bullish candle, right? So we get the closing part, which is at the top. Remember, the stuff was downtrend. So now what happened? The new day form, instead of this price to continue up, it drop, it makes small drop, then move above the line and turtle soup above. Then because it turtle soup above, we are looking at situations where we will receive a candle close below the line. Look at where candle close below the line. After this first move, after the formation of the new day, this thing move up, then make a drop. Okay, remember it was a downtrend. So this first drop spike, the body is still touching this our line. Let me pick the other side. The body of this candle is still touching this our horizontal line, so we ignore it. So from the, we allow this one to open, this one open and close successfully below this our horizontal line. Then from the beginning of this particular candle, you will get in, we get in, price move down, move back, do all sort of things. Then later went back and turtle soup. And I want to show you, tell you something. You see that this price move up here, then drop, oh, as it forms, it started moving up. We are not interested in all this first move of the price, this ones, all this first move. You know, it forms here, the new day form and close here, we place our line, then it form and continue up. So after the up, it makes a drop. Even if this first drop continue dropping, oh, we are not interested. We are interested in the returning of the price to the 9, which is here. So I want you to grab this in the continuation of this explanation. The returning of the price to the 9, which is this one, not this first one. So now, as this one, you see, it's turtle soup the 9, then make a drop. The first drop, the body is touching, you know, this bearish candle closes below, but the body is touching this line, then we ignore it. Then this one open and close, and its body is not touching. Then from the beginning of this candle, we make our entry. So upon the spike, then Unitas move down and closes red, then move up again, gain momentum, and started moving down, and it continues down like that. All right. So I said something about the returning of the price, and I want you to pay attention to the next and the next so that you grasp what we mean by that. So you see that this one paid successfully. Okay, it's a downtrend, a new day formed. This new day that formed as a bearish. So this bearish closes below. Remember, all the bearish candle closes to the downside. It opens from up and closes down in form of this. You see this one closes here, and the previous day was what? Down. All right, previous day was down until it meet this new day. You see that as it form a new day, it first of all make this move, comes down. All right, as it comes down, we are not entering on this one, so we are entering from the second return. You see it returns back again to the 9 and turtle soup, not this very first one that was moved down return. So we are interested on the another return. You see, upon this return, then you notice that this one spike and close above, this one spike again and close below, but the body is touching, so we allow it. Then this one spike or move and close successfully below. From this one now, we make our what? Down entry. But something happened, we make our what? Sell entry here, because the anticipation is that the price will continue to go down. But within this point now, you see we have a series of zone. So if you are trading, because you must observe is a price action, you must also take some things from cognizance. Because of this fractals here, meaning we have a support zone around this point, okay? So now, because it's very close to entry, is either you allow price to break below this previous support, or you make your entry and then wait for price. But the situation is that they will use your money to make all the reaction before they continue. So let us see what happens. So you see, there are a series of range here after our entry. Where is that our entry? Look at our entry here. So you see, as you make your entry, there was a little drop of sell. They went back to the 9, gather momentum, comes back. They went 9 again, comes down before they continue down on a ranging form. So there are several ranges here, but it moves a bit down. It puts in a small profit, but not up to 50 pips. I think it paid, but not up to 50 pips. Then a new day was what formed. But still, if you swap this thing down, you notice that that trend is still down, even as it meets the new day. So upon meeting a new day, we have a reversal pattern here. Look at this reversal pattern, because you must also be concerned about patterns that might alter the previous trend, because you said previous trend is considerable. You see, it was a downtrend before. Upon the move up, that is when it makes when it meets a new day. But before it meets a new day, there was a, okay, let's put this in and see, there was a break here of this higher high. Are you seeing it now? There was a break of this lower high here. because we've been receiving lower high structure here. Then, but upon forming a new day, there was a break, and we have a higher high, which is a sign of what? Uptrend. So what do? Your interest is that a new day has formed. You check what happened previous day, then you grab your new day close. All right, this is the close, the bullish. It closes at the top. Now the price was anticipating up because of the pattern, the double, triple top or bottom that formed there. So now you see it move upon the new day and form a new day. After forming a new day, it started moving down. Then as it moves down to grab this low, then it move again. Let us see. It move again. Remember, as this one was, you see, after upon the new day, the first move was down before it move up. And I told you this first move, most of the time we don't put mouth. We are now after the move, net price return official to the line, and of course it did here, though it couldn't touch much, but there is an element of rejections from the candle, the last candle that dropped near. There was upward rejection. So it was when that one closes above the beginning of this candle, or because when that red dropped, why should it enter from the beginning of the other candle? When this red dropped, you might be anticipating more drop to make a total grab, Are you there? But it couldn't get there, and then rejected to the upside until this candle come forming between, thereby producing another reversal sign, which is a doji. Then this one now form and full and close up. So your entry should come on this particular candlestick, this one. That's where your entry should come, and you can see you move up. This one come here and create another double top. Let us see what happened. You see, because the double top couldn't complete, it get to the neckline and then still return back, but your entry should be here. Based on circumstances, it should be there, because that is the only confirmation when we receive a total close to the upside. This one close to the upside, then you can also make entry from the beginning of this one. You make your entry and you hold till, you see, it gives you 50 pips, and then another new day begin. Look at what happened, because you check situations in this strategy. New day was also a bullish. Okay, this candle on the period separator, it was also a bullish candle. Are you seeing it? So, but upon forming this new day, you see that this thing navigated a lower high here, then it created its low. Comes upon forming the new day, we have equal high at the top side, this one and this one. Are you there? Meaning that that resistance there is very powerful. Then you allow the move of the market. You see, this market move to the downside, then return back to the line and make a grab. I seen it, and as it grabbed the line, there was a total rejection. You see, it was the wick that is touching, which shows you that there is enough force here that makes it into close below the line. Then from the beginning of this one, you make your entry to the sell side, and there was a drop. Are you seeing it? So this strategy, you see, as it drops and gets and to soup the another this thing, there was a reaction to the upside. So this previous day close, you see what happened here? It grab and also continue until it forms another new day. Look at the new day again. Are you seeing it? So upon the formation of the new day, there was a pattern that makes this thing to goes up, which is because there is an uptrend formation here. If you put, even if you put this thing now, you see there was a break and a text here. Okay, let me show you something. There was a high, a lower high, then there was a break and the text here before the new day was formed, and this new day happened to be bullish as well. So we're also going to get the closing part of that new day, which is here. Okay, then anticipating price to go up. You see, as the new day formed, bam, the next candle started coming down. Upon coming down, you just wait, because we're anticipating to go up. Remember, the previous day was down, then upon forming a new day, there was a break of structure to the upside. All right, so but now you see what happened. The new day form, this one started squashing down, and price never returned again. You see, you didn't, that means you will not trade for this day, because we are waiting for a returning of the price to our line, but it couldn't return successful. All right, so this one that came a little bit but it couldn't go, but this pattern might violate it, because if I'm trading, I will not enter trade for that very day unless after the break, here. So that is, so it continued. Look at this one now. It was a downtrend. This one was a downtrend, and the same thing even happened here. It was a downtrend. So let us check on volatilities so that we compare and know how those things work. Okay, let us check this boom 300. You see, the previous day was up. Okay, so upon forming a new day, there was some kind of movement that produced a pattern. You see, let me show you something. Just make an entry now. There was, if you stretch this thing up, so upon forming a new day, there was a double top. It forms a new day, go up and stop the previous day up, which forms a double top. And double top is a sign of what? Downtrend. Okay, if we take our trend line like this, assuming we take our trend line like this, you see there was a break of this, and a break. Okay, this lows, let me put it well so that we will not make mistakes. So if I stretch this trend line now, you see there was a successful, this is the new day formation here. Okay, then price went up, comes down, then return back. Now it's exactly on the new day formation, so it will only make a little push and continue to the downside. That is the expectation, because we have received a pattern. Here, and this pattern signifies downtrend. So, and there was a break here. You see, there was a break, then retest. So we expect this market to continue down. All right, we expect it to continue down, as in Rema. So why it comes up now is just to turtle soup again a little bit and then continue down. Remember, it has made the very first move, which I say we are not interested. You see, price has returned to the line. Okay, from here now, after a little push, it will now start going down. So that is the expectation of this price. So now that is why I noted this my entry here and put my stop loss in case it goes higher than the previous lower high, because here we have a lower high here. If we put here, what is this thing? We have a high here, we have another high here, but this one now is lower than this. Okay, and it's caused what? A lower high. All right, if we use trend line on it, you find out that it's a proper lower high. Okay, but this price self, it will still push more, just a little bit up to turtle soup the line, then it will continue down immediately. So that is the expectation. You see, some rejections are coming, but we have a double bottom. You understand? We have also a double bottom here. We have this kind of double bottom. All right, so the pattern just completed is now thinking whether to continue up or down. But in the view of 30 minutes, we are still looking at how the candle will close. This bullish candle, how it will close, will determine. So now you see this one taking some rejection from the line. This is our previous day close line. You see that price move, return back to the line. Now it's rejecting. Okay, so I'll allow this candle to close, the beginning of the new candle, then I'll get in and follow the price to the downside. It's in form of a break and retest. You see this lows was break, then price retest to it, which happened to also be at the closing part of the previous day. All right, so now we are going to fire in after the closing of this candle and the new candle begins. So that is how this thing moves. So it works everywhere. It works in volatility. Let's check any of the volatility. Let's say volatility 75. I know some of you like to trade them. Volatility 75. Okay, it's not here. Let's choose any available. Let's say 10 index. Let's 10 index. Okay, look at this 10 index now. You see now, look at the previous day close. Let me pick it out. Previous day close. You see it here. You see now this price is returning there. It's returning there to turtle soup. You know, it opened then and moved down. It's coming now to turtle soup then and continue down. So that is what is coming up to do there. You see, so that is how this thing work. So try it. You have so many examples. Look at this one. I don't know, this one now, it didn't play well, or let us see what happens. This one open from here, open a new day from here. Okay, then it moves up, then return to the line and grab liquidity, and then push to make a new push to the, you see it pushed up after the returning to the line. Remember I said the returning of the line is very, very important. All right, it's very, very important to allow it to return to the line, then it's paid to the new day. Then this one now is returning to the new to the line, just like as this boom 500 return. You see how the rejection is coming on the candle. You see still rejecting to the downside. Then after everything, it will form a kind of doji or spinning top candle, which is also a sign of reversal. So that is how all these things work. Okay, it's not magic, it's something that works if you understand them. Okay, if you check here now, what will happen here now, this one will make a little bit move and spike, and if it is spike now, the spike will now produce a lower high or a double top. This market that is moving now, to move to some extent, spike, cause a double top, and then boom to the downside. Okay, so that is how this thing will move. P30 is a very strong strategy. It's a very strong strategy that you cannot afford to miss. You cannot afford to miss it. If you don't know it, you pay attention to this video or you follow up the classes. So I just decided to make available this video so that you can be able to look at them, understand the instructions, and then know what to do on your chart. Look at this one. This one form a new, which one is this? 50 index IX. Let's grab the new day. The new day was bullish. Have you seen it? It was bullish candle. Look at it. Let me put it well. This one. Okay, you see that price came up. Let me reduce it a bit. Price does what? Open, goes up, come down, return back to the 9. Let's now watch what happens next. You see it's pushing down now because it has came and make a little touch to the 9. Doesn't touch it, but it returns. You see, that's what shows you that line is very strong. You see how price has been returning to all those ones I've been showing you. So it's not returning by any. If you check here now, you see some reaction of the price on the line. I see them. So that all those lines or the closing part of the candles are very very important in trading. All right, and you can only grab that when you connect with us and know what to do. So that's it. Thank you and congratulations. I don't want to make this video more lengthy, so we'll be talking more of, we're making available more of the video concerning this until you understand how to follow it, because it's a pure price action. Thank you. Remember, this is Don ValueFX, and don't hesitate to hit the subscription button and then ask your questions on your comments in the comment sections or my WhatsApp. Then meanwhile, if you are not a trader, if you are a trader or you are watching this video and you want to become a trader, so quickly click on the registration link below this video. My phone number is there, or if you don't know, you can also click and chat me on WhatsApp. I will guide you on how to make your registration and follow up our activities back to back. Thank you very much and remain blessed. This is Don ValueFX. Congratulations. Okay, I said once again, congratulations. You see this one has returned to grab liquidity. Look at it. You see this is look at the previous day close, which was bearish. You see it's bearish. Okay, so you see what happened. Price moved. It closes here. Price moved, came back, grabbed liquidity, move, comes back again, is grabbing another liquidity. So one thing left, I want to tell you, each time you see between one period separation to another, you see that price came back, make it first move, return back again. We also permitted to enter on this second return. Then if it goes up and return to the third time, don't enter. So we only permitted to trade twice on a particular line. All right, twice. If it return to the third time, don't enter again. Don't enter again. Look at what happened here. Let us check the previous day close of this one, which happened to be bullish. It's bullish close. I seen it. So after the close, the bullish close, price make a little range, went up and touch soup, then drop, come back to the line again. What happened? It grab liquidity and continue down. So it's very simple. Just wait the returning of the price to your line, and you now go in for entries. So thank you and remain blessed. We keep watching. You see, it's ending as a doji, as I told you. It's ending as a doji. This spoon 500. I'm going to trade it. That's why you see me put so many analysis on it. I want to follow the market up to the end. All right, I want to follow it up to the end. So that's it. So congratulations if you have watched this video. Please don't forget to subscribe. It's very important. That is how you encourage us to do more of this. Bye.